Okay, very good. All right, so again, same thing, longer term trend, shorter term trend, same kind of principle applies here. Now you can see in the Peterborough market, again, a very aggressive trend over the last 3 years with some ups and downs periodically, but ultimately a very strong market over even the last 10, let alone the last 3. Okay, so that's specifically how the market is trending right now. Okay, so now this is a lot of numbers, not to digest completely as we're sitting here, but more what I want to do is show, okay, let's look at in a market that is trending the way that this one is, let's take a look at what kind of deals work. So this is a model for buying single family homes and duplexing them. So the Burr model specifically done by duplexing. So what can still work in a market like we're in today? And I'll show you 2 things as it relates to that. So one is, let's look at duplexing, because that's been going on for many years now. Many of us have been doing that and profiting from it. So what we can do in a market like Peterborough, in a nutshell, we're going to purchase for 680. Our short-term capital is 300. Our long-term, meaning after our refi, is 163. Cash flow of 227. Projected 5-year ROI of 42%. This is at an ARV of 851. So after the reno is done, we're at 851. Our net profit, let's say we project it 5 years and say we're going to sell this asset. Our net profit, gross profit minus our capital of 163 is 343. So we're going to tie up basically 163,000, and we're going to profit 343 is what this projection shows. Okay, so that's important, because the underlying question that I'm answering isn't just what's going on in the market, but how to succeed in the market. Okay, so that's duplexing in the Peterborough market. Now let's look at the Oshawa market. Everything, again, we're going from a secondary in Peterborough to a primary in Oshawa. So I'm showing you the difference in those 2 markets and what the numbers look like, so you can assess not just what's going on in the market, but how can I succeed in it. So purchase price of 880, short-term capital 347, long-term 182, cash flow of 337, and an ROI of 52%. Long-term net profit, 5-year projected, is 473. Okay, so and this pie chart is a breakdown roughly where am I building my wealth from when it relates to this money across mortgage, appreciation, and cash flow. Okay, so that's where they come from. Now, let's look at, in a market like it is today, which is a very competitive one, where can I go to, how can I position myself today to try and build the most long-term wealth, whether in the northwest, east, or west, or whether I'm in a primary, secondary, tertiary market. This strategy positions investors extremely well. Okay, so, and again, we're going to dig into this more in the lunch and learn, but it's important, I think, in the context of the market update, to be able to see also what works, right? So secondary suites that I've just been talking about for the last 10 years, this is a standard up-down split. So primary on the main floor, additional dwelling unit on the basement. Now, more recently, SDUs, secondary dwelling units, are part of the provincial density mandate. Okay, so we talked about density and that landlocking and the more tax dollars per square foot. And this trend is continuing as the province sets their mandates for each municipality. So second suites was one of those first steps. SDUs is one of those subsequent steps. Okay, so the SDU, the secondary suite, is a retrofit apartment within the existing main house. And an SDU, there's a few different flavors of these, but generally speaking, that is another dwelling unit that is outside of the main house. So they come in garden suites, which is, picture it like a garage that is turned into living quarters, fully functional, fully autonomous, with its own kitchen, own bath, own HVAC, own electrical, own plumbing, and it sits apart from the house. So it comes in garden suites, laneway homes, coach houses, tiny homes. Those are all forms of SDUs. Okay, so that SDU and this knowledge that we have as investors around what's going on in the region, what is going on in the Durham market, how can I categorize primary, secondary, tertiary, and then how can I position myself for long-term growth, is all part of the answer to what is going on in the market and how do I succeed in it. Okay, so these SDUs are a huge part of what's going to be happening over the next 5-10 years. And they themselves will evolve as the density mandate increases and as the population and supply trends continue in the direction that they've been heading. Okay, so the approach to future opportunities. So now just think of this. We've created phase one. We buy a property, we duplex it. Okay, we do our 6-month reno, we pull out our capital. I believe the audience here is very well conditioned to what BRRRRs are, and so I'm moving fairly fast through that. But we buy a property, we duplex it, we refi, we do our BRRRR model. Phase two of what I'll show you here in a minute is we hold the property for, let's say, 3 years, so that the mortgage pay down, appreciation, and cash flow accrues. We position ourselves for a refi roughly in that 3-4 year time frame. We use those funds to now put in an SDU. Okay, so now we're funding a third unit on the property. Take a standard BRRRR, buy a bigger lot, position it to fund the third unit being built on the property. So let me show you what that looks like. So that is exactly what we're doing and what we're doing with our clients. So I'll show you 4 examples of that. So this is a property in Peterborough. You can see this is the main house right here. And the lot is absolutely huge. This is like farmland almost. It's just gigantic, which again, when we talk about primary, secondary, tertiary markets, and the fact that it's not a good, better, best, one of the benefits of a tertiary or a secondary is that there is a little bit more land availability for strategies like SDUs. It's not that they're not available in primary markets, but there's more availability in the other ones. Okay, so pros and cons. So this is, all we've done here is rough out a 33 by 23 garden suite unit that could sit on that lot. And so we're purchasing this. Phase one is to duplex it. Phase two, hang on for and let it accrue some wealth. Phase three, refi and fund this garden suite down the road. There's some more benefits to that strategy and waiting for the garden suite as well. Again, not to dig into right here, but it's definitely there, okay?